Selling illiquid part of Woodford portfolio could drag on for years. Link Fund Solutions is making a second payment to investors trapped in the fund formerly known as Woodford Equity Income later this month, but some fund selectors think the illiquid portfolio could take years to sell as volatility ravages markets. In a letter to investors on Thursday, the authorised corporate directors said since the last update at the end of January, it had freed up a further £141.7 million in the LF Equity Income Fund, which is expected to be paid to investors on the 25th of March. The capital raised is equivalent to 19.9% of the fund's assets. Link said the latest sum will take the total paid back to investors to £2.3 billion. It follows the first distribution on the 31st of January, which represented about 75% of the fund's net asset value. The fund has been split into two portfolios, A and B, in order to sell the assets. Portfolio A contains liquid assets sold by Blackrock, while Portfolio B, with illiquid holdings, continues to be sold by PTJ Partners. This will rumble into 2021'A.J. Bell, head of active portfolios Ryan Hughes, said the fact the update comes after a majority of Portfolio A's assets have been sold by Blackrock indicates PTJ Partners has had success in selling some of Portfolio B, which previously had no sales. But he added, with the latest distribution amount representing just 20% of the remaining assets, there's still a long way to go to, especially as market conditions have become increasingly difficult. We've seen market conditions deteriorate considerably, meaning that selling any unlisted and illiquid assets is likely to become much harder, he said. Hughes added, while the asset manager will balance the competing needs to sell assets at a good price versus the saga dragging on for years, it seems inevitable that this will rumble on into 2021. Legacy funding commitments adding to woes. On Wednesday, LF Equity Income made an investment in Rutherford Health of nearly £10 million as part of its legacy commitment to fund that business. This takes the fund's holding in the company to 28.81%. Willis Owen, head of personal investing Adrian Locock, said the fact that the fund is still obliged to make investments such as Rutherford is a clear indication of the challenges the administrators face. Being a forced seller when you own over a quarter of a business will make it exceptionally difficult to get a good price for the investment, he said. The already long and drawn-out process is likely to continue, potentially for years. Remaining assets are less liquid. Link said it could not comment on a timeline of future payments beyond the details in the letter, adding further distributions will be made when suitable amounts of cash have been made from the sale of the remaining assets. The letter said, investors should be aware that the assets that remain to be sold are the less liquid assets of the fund, and for more on this story, visit the news article link.